Everything you're about to hear is for education and entertainment purposes only. Whilst we are licensed, we're not aware of your personal financial circumstances. Any advice is general advice. Equity Mates operates under Australian Financial Services Licence 540697.
Equity Mates!
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome back to another episode of Equity Mates, a podcast where we explore what's possible in the world of investing. If you've just joined us for the first time, a huge welcome to the community. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you?
I'm very good, Bryce. Very excited for this episode. We are going to be joined by Andrew Page. He's the founder of strawman.com, a private investing club. And Bryce, today we're really interested in unpacking the world of small caps.
We are, yes. So specifically what we're going to be chatting about is the rotation into small caps, because there's been a lot of commentary coming from the market that this is the year that small caps outperform the big end of the market.
Yeah, now for people who are unfamiliar, small caps are just those smaller companies. It changes, the size of them changes based on what market you're looking at. In the US, it's probably up to a couple of billion now.
Yeah.
In Australia, it might be up to a bill.
1.5 or something. Yeah.
And small caps have underperformed the past few years. And as we sort of entered 2025, you get the slew of predictions from every media company, every investment bank. We made predictions, so we can't disparage them too much. But there was one really common theme that emerged over and over and over again, and that was both in Australia and in America. The prediction was that this was the year for small caps. We pulled out some examples just to illustrate the point. Jefferies said they expect small caps to outperform large in 2025. Russell Investments, they said there's a compelling opportunity set for US small caps in the year ahead. HSBC said that previously overlooked sectors such as small caps are likely to gain traction. There's a number more, but you get the point. It was a really common prediction we saw in 2025. But,
yes,
and this is the but that is always forgotten when these predictions get made.
Yeah.
The internet never forgets.
No.
And if you look back on previous years, you see this isn't the first time such a prediction has been made.
I think that there's been predictions made on this show year after year by experts about the small cap outperforming.
To illustrate the point, we looked up 2023 predictions and we found one from UBS and another from Schroders thinking that small caps would outperform. So look, we've heard the story before, and what we really want to unpack in this episode and really over the course of this year is to get deeper into the story and understand if this year is going to be the year. Because at the back end of 2024, we did see small caps do quite well. They did start to emerge. The question is, will that trend continue, or will these large mega cap stocks, the US tech companies, the Aussie banks, will they just keep driving the market forward?
Yeah. And history shows as well that when this does occur and small caps do start outperforming the larger end of the market, not only do they just beat them, like they convincingly outperform. And the period in which they do it, I think, is historically actually quite a long period of time as well.
Yeah.
So something we'll be definitely watching.
So to help us understand it and unpack it, we're joined by one of our favorite small cap investors, Andrew Page. Now, to give him his dues, his bona fides, he, and this is just one example, I think he's had a few good stock picks on Equity Mates, which is why you've got to listen to everything we produce. But he jumped on the podcast in January last year and spoke about Dropsuite, which is up, I think, about 57% in the 12 months since.
Yeah.
So this guy loves small cap investing and he's pretty good at it. So we want to unpack the question around rotation to small caps and how we should be thinking about investing in the smaller end of the market. And there's no better person to do it than Andrew Page.
And I should note as well, stick around to the second half of the interview where we take a bit of a pivot and get his views on all things Bitcoin. Which was fascinating because he's someone we've known now almost the entire journey of Equity Mates. And for years was hard no to Bitcoin. And boy, has that tune change.
Yes, they're in the markets. We're looking at about a rotation to small caps. In Andrew Page's life, he's had a rotation into Bitcoin and Australian property, but we don't actually talk about that. But I think without any further ado, let's jump into our conversation with Andrew Page.
Well, Andrew, welcome back to Equity Mates.
Hey guys, good to be here. Happy New Year.
Happy New Year, yes. Very excited for this one. For those of you who haven't heard Andrew before, we certainly encourage you to go and listen to many other podcasts that we've done with him because they are full of wisdom, as I'm sure today's will be. So, Andrew, we wanted to start on small caps today.
I'm going to interrupt you. I'm going to interrupt you right there.
Yes.
That was a lovely intro, but I believe that last time we chatted, there was talk of a trophy, something that was going to be delivered to me.
True.
I'm looking at my trophy cabinet right now, and there's a space.
Well, Andrew, good news is I'm looking at the trophy right now in our studio.
Yeah, you've got to come and collect your trophy.
Okay,
you know,
it's on me.
We can't send it out to the Blue Mountains. So
look, to prove that it's true.
Here we go. This is terrible audio, but if you're watching on YouTube, Bryce
Andrew, I don't know if you can see this.
Oh, that is lovely.
Andrew Page, guest of the year 2023. A bit out of date.
Was it 23? Okay, right. We're going to come in hot for 25. See if we can go get another one.
No, we will deliver that. I will get that in the mail.
So, Andrew, at strawman.com, you run a private investing club, and there's a real focus, I guess, on small caps and Aussie small caps in particular. So we want to start this conversation by talking about small caps because every investment bank, every analyst comes out with their predictions at the start of the year. And a big theme for 2025 has been this is the year for small caps. The rotation to small caps is on. The Russell 2000 is going to beat the S&P 500. Similar predictions being made in Australia. So before we ask you about your view on small caps, we want to ask your view on the predictions themselves. How much weight do you put in forecasts like that?
Zero.
Yeah, I thought so.
I'm sure a lot of your guests say that, and it's always a good laugh. I mean, you've got to remember these predictions are marketing efforts. Look how smart we are. Look how prescient we are. Come and put your money with us. The reality is that people have tracked this stuff, and the track record is abysmal. So just every year I write the same update for the first one for the year, and it's outlook for 24 or 25. And all you need to do is just do a Google search for market outlook and just change the date. Go back a year and look at what everyone was mentioning. AMP said we're going to have 2 rate cuts last year. The market was going to be meh. UBS said the same. It was all, valuations are a bit stretched. It's a little bit hard. The market ended within spitting distance of an all-time record high. The RBA didn't move. It was just like wrong across the board. And it's not like 2024 was anomalous. So it's not to throw shade at these guys, and that's always fun to do because it's easy to do, but they're wrong. So don't listen to it. and even if they are right, it's 1 year, right? So you get that year right somehow. Even a broken clock is right twice a day. And then it's just like, okay, so now it's 2026. What do I do now? So that you've got to be repeatedly right on these very, very short-term kind of calls to do well. And in fact, just to do better than the little old lady who puts all her money in an index fund and goes to the crochet club. So I have pretty strong opinions on it. They're a waste of time.
Well, speaking of the index fund, how as everyday retail investors should we think about getting access and investing in the small cap space? Is it the index fund approach? Is it finding the best small cap managers? Or is it trying to actually pick the stocks yourselves?
I'm a big fan of passive investing. The reality is, and again, no one likes to say this, but investing is really hard and it's a lot of work. And even when you get it right and you're okay at it, it's very stressful, right? So there is a lot to be said about instead of trying to find the needle in the haystack, as Jack Bogle said, is to buy the haystack itself. But I think that only really holds true when you're talking about very broad-based high-level indices. Once you start doing the thematic indices, once you start doing the more narrowly defined indices, it gets a little bit harder because there's a huge amount of subjectivity in that. So what do they mean by small caps? Well, if we look at the Russell 2000 index, it's just basically there's a liquidity sort of threshold in there and a market cap threshold. When you look at the when you look at the ASX small cap space, what is it, 2/3 or something are mining explorers. But within that, you've got, industrial companies, you've got retailers, you've got technology companies. I mean, they couldn't chalk and cheese. The only thing that they share in common is a market cap and liquidity threshold. So when you buy a small cap index on the ASX, you're getting a load of garbage, because a lot of the criticisms that people have about small caps actually aren't that unfair. There's a lot of crap, if I can use the word, that's in there. Forever gunner companies. We're on the cusp of this next big thing, and we'll just do one more capital raise, and we're going to do it, I promise. And it's not because they're evil, it's just because business is very, very hard. But as a general rule, I don't think you will do better than you would with just a broad-based S&P ASX 200 sort of fund because of all of that. So if you are going to go into small caps, you'll do yourself a huge favor by being a little bit more selective and a little bit more proactive. There's a spectrum there. You might just say, I'm just going to find the best stock and going to invest in it, or I'm just going to try and find 50 that are okay and invest in that, or I'm just going to cut out the materials and mining explorers companies or the early stage biotech companies. And you might just sort of say, listen, I like small cap, but I'm just going to go for companies that are, that have a real business, that have positive sort of cash flows. And if you're talking about that kind of stuff, I've got a lot more sympathy for the basket approach. But just the way that these sectors are defined and the way that these passive ETFs are constructed within that space, it just means that you are lumped with a lot of garbage at the same time.
So how about the decision between this small cap active manager and then approaching it as an individual investor yourself?
This is tough as well. Again, it sounds really mean, just like I'm the kind of person who just likes to throw shade at everyone and everything in the industry, which is a little bit true. When you look at the track records of a lot of these fund managers, they're not great. And they're not outperforming just a basic benchmark here. And when they do perform really, really well, they don't often back that up. Now, it's not because they're idiots, but that they operate under very different incentive structures. So they're really trying to say, what can I really got to knock the lights out this year so I can write a really good annual report so that I will attract more funds under management. And it just means that a lot of the time you're just not there long enough to really benefit from all of the wonders of compounding that we all so often sort of talk about. There are some incredible small cap fund managers that are out there at the same time. So, horses for courses. If you're going to go that route, do your research on the fundie that you're talking about. For me, I want to see a record of at least 3 years, hopefully 5 years of decent outperformance. I want to see a significant portion of their own wealth tied up in the fund. You can't get more of a red flag than a fund manager who doesn't have money in their own fund. And you might be listening to this going, well, that must be rare. No, that's the norm, right? And it's just sort of like, well, if you don't trust your own money to it, I'm certainly not going to trust you to it as well. So do that, but just, make sure you almost got to do as much research on the fund as you would do on a company if you were going to buy the company directly. Don't just go, I want to go small cap because I heard some podcast or some outlook said that small caps is great. Oh, wow, it looks like, AMP offers a small cap fund. I'm going to go for that. I think that's the mistake. Do your research.
Yeah. I think that is something that we've learned over and over again. Like if you want to play in smalls, if you want to play in emerging markets, there's just some markets where you do need to do the work, whether it's you're buying the individual stocks yourselves or you're backing an active manager.
Yep.
So, Andrew, we want to hear what's going on in the small cap space at Strawman. You have the collective view of the community in terms of watching a number of companies and seeing what stories are emerging. So what are the trends, what are the stories that we should be aware of in Aussie smalls as we enter 2025?
I would say there's no grand overarching thematic at play other than perhaps that, as I said, last year we saw the market end very close to all-time highs after a very good run. A lot of those gains were underpinned by a handful of very large companies that did a lot of the heavy lifting. This is particularly true in the US. We take out the Magnificent Seven and the indices don't look anywhere near as good. And so small caps have largely as a category been left behind. So you will find as a statistical observation that the valuations are more palatable in the small cap space. So that's probably one generalization I could make. Other than that, not to be difficult, but I don't think there is any larger thing that you can draw. I don't want to generalize too much amongst our community members, but it is very much a bottom up driven type approach in the sense that let's look at the merits of this particular company, regardless of it, whether it's in AI or quantum computing or it's below a certain market cap. It's very much, this is a business. Do I want to be a part owner in it? So you'll tend to see most of the discussion, in fact, 99.999% of the discussion is on the merits of the individual business as opposed to, any sort of generalizational theme. But there are opportunities out there. And you guys remember a few years ago when we sort of had zero interest rate policy and money was just being thrown out of helicopters and valuations.
Do we remember? Those were the glory days.
Stocks trading at price to sales of 20 and stuff. Like, it was just absolute madness. When that party finally sort of ended, small caps took an absolute beating, right? And a lot of them haven't really come back. And a lot of garbage deserved that sort of reckoning. But usually what happens is that babies get thrown out with the bathwater, and we did see incredible opportunities. Of course, that's the time when no one else is interested. So at that time, it was sort of like, and the strawman index was down. It wasn't doing well against the broader index, but there were pockets of opportunity there was super exciting because no one else was sort of interested. Now, I'm just trying to look it up now. So over the course of the last 12 months on strawman, you can look it up on our blog, but we did 33%, versus 15% for the ASX 300. That was a direct consequence of sort of being bold when everyone else was sort of fearful. So a bit of that gap has closed. At the same time, there are some real gems that are sort of under the radar that are there that just haven't caught the attention of the bigger players. And sometimes even when they do capture the attention of the bigger players, they just don't have the liquidity. The amount of shares traded each day isn't enough for if I'm managing $100 million and I want to make a $3 million allocation and this stock trades $10,000 a day, I can't do it. And if I can do it, it becomes a bit of a lobster pot, like hard to get in, but almost impossible to get out in a hurry. So it leaves it kind of, I think we spoke about this last time on the show. It's sort of like you, me, and some idiots on hot copper. It's like that is a really good competitive dynamic to be a part of, right?
So Andrew, speaking of hidden gems, last week on the show we launched the segment $500 to $5,000, where I'm going to try and 10 bag in a year.
I love it.
Easy done. Part of that is obviously going to be getting my head in the small cap space. Like that feels like where the opportunity is. And I guess challenging myself to try new strategies and look at different companies. So given we have you here, I want to take the opportunity to unpack your discovery and research process. And let's start with the discovery piece. How do you go about actually finding new ideas and new opportunities?
A long time ago, I used to like scans, those kinds of filters. There's a lot of companies, I'm lazy, just go find me everything that matches up with these kinds of considerations, and considerations that, ostensibly make a lot of sense. I like profit, I like growing profit, I like a little debt, et cetera, et cetera. I found that process, though, just missed so much stuff because, again, you're buying something not for exposure to its past, but by its exposure, you want the exposure to its future. And a lot of companies look really ordinary when you look at the historicals right before they explode. And it makes sense. You guys have run a business. I've run a business. Anyone listening to this has run a business. What do? You slog your guts out for years with money just going in one direction out of your bank account. You're building a product. You're doing R&D. You're trying to establish an audience. Whatever the business is, you look at that business the day before it goes parabolic, and all you're seeing is negative cash flows. You're seeing dilution. You're seeing no earnings, no sales. I'm absolutely not saying look for that and then go and buy all of that stuff. Absolutely, I'm not saying that. But I am saying that when you do that sort of filter approach, you tend to, you can find a lot of good stuff, but you find stuff that's already starting to be sort of recognized in that. I like companies that have spent years doing very good product development that are starting to show good sales traction. So in other words, they had a good idea, they invested heavily for it, and they're now getting some confirmation from the market itself to sort of say, yeah, we like this and we're buying more of it. That's a pretty good tell. And again, you might be at a stage too where their sales are getting some really good sales traction, but there's no earnings there yet. Maybe they even need to raise a bit more money or take on a bit more debt because, oh my God, this thing is working. Like, give us some more capital. We're getting a return on investment here of 40%. give me, and I can borrow at 6%, like give me as much money as I can. And the filters are going to miss all of that kind of stuff. And it really is about just doing the work. And it's not appealing for a lot of people, but read the annual report, go to the source material, right? You know, and for me, it's just, I'm just not a smart man, right? And so I need to have something that I can understand. And that really just knocks out 90% of stuff for me. I mean, and I mean beyond being able to describe it, right? Like, yes, this is a SaaS company that is doing third-party logistics, you know, cross-border between here and Southeast Asia. I can say words that make me sound smart, but do I get it? Do I understand that industry? Like, what exactly are they doing? How are they doing it? How are they doing it differently to their competitors? And why would customers choose them over their competitors? And is there any evidence that this is kind of working? Like really, really basic questions. The investor that can leave their ego at the door and have that humility just to sort of go, gosh, I spent a bit of time reading about this company, visiting their website, looking at their product, their service, and I just don't really get it. And then saying, okay, I'm going to leave that in the too hard pile and I'm going to keep on looking. And that can be hard when the shares are going to the moon and all the forums are lit up with this is the best thing ever. And, you know, perhaps they've got some thematic that's really sexy at the moment. Like AI is the obvious one. And that's very hard to sort of sit by and watch all of these sort of things take off. But if you don't understand it, then you're essentially sort of gambling. And you'll find that when you go through that process, it leaves you with a fairly small basket of things that you can really then get into the weeds on and really start to understand. So I'm very much a concentrated investor. I like to have a small basket and watch that basket like a hawk, as opposed to having 100 million sort of shares that I sort of understand a little bit of and hope that it's broad enough that I'll catch the next big winner. I want something that I can partner with for 10 years that's going to compound at 20, 30% per year. If I look back in 10 years' time and I've added nothing new to my portfolio, I don't really care, right? Like the only thing that matters is the performance of that portfolio, and the performance is probably going to do best if I'm focused on the things that I feel I understand better than my competitors out there in the market. I've invested a huge amount of time in trying to deeply understand it. I've got a sensible notion of value, and I'm just along for the ride. And I'm not gonna balk every time it jumps 5% or dips 20% or anything like that. It's that relentless slothiness that I you know, it's like doing all the work and then letting it play out. Because we have this sort of thing as investors, as humans, is that once you see something, you imagine that the rest of the world, the penny's going to drop for the next day too. But it can be infuriatingly long. But once you play in that area that you feel as though you've got an edge, and there won't be many areas, but if you can play in that area and just focus on what you feel super confident with, I think you can go a long way with that.
So, Andrew, there's a number of things to draw out there. And we wanted to ask what your investment criteria was when you were looking at small caps and doing the research. And I think you said some of them there. So you wanted to find those companies that had invested in a product and had sort of really found product market fit and were starting to see, you know, inflection point in their sales, not necessarily earnings. You mentioned later in the answer there around wanting to find a company that can compound 20 to 30% for years to come. What's the full criteria? What are you looking for? What's a big tick for Andrew Page in this small cap space?
I like, again, it probably sounds overly simplistic, but ask that question of what is the value proposition here? What are you doing for your customers? It seems stupid to sort of say here, but it's like if you're not delivering genuine value for your customers, they're not going to hang around or they're going to go somewhere else. So what do you do that no one else can do or no one else can do as well as you? The most easy way to look at that, I think, is things like customer retention, churn, sales traction, because the numbers don't lie in that regard. Like, a company and the management team will tell you that their company is the best thing since sliced bread and look how wonderful it is. But if they're not gaining market share, if their sales aren't going up, we can worry about stuff below the top line later on, and we should, and the balance sheet and all of that other kind of, wonky kind of stuff. But if you don't get that part right, something is seriously wrong. Well, not wrong, or it's either at best it's wrong, or at best it's a question of not yet. In other words, you can't claim with any serious affirmation that, oh yes, this is genuinely something that customers love and want more of. Remember you guys held the expo a couple of years ago.
Yes, FinFest.
FinFest. Excellent event, by the way. Hopefully you're doing another one. My pitch for the talk that I gave there was Stealth Girl. So I'm going to do a short victory lap here. It was 8 or 10 cents at the time. It's 46 cents or something at the moment. But nothing's changed with that business other than there's a bit more water under the bridge. But what was it that grabbed my attention then? Super, super, super liquid. So no one could play with it except small-time retail investors, right? So that's pretty good. I've got much less competition. I'm not against the gigabrains on Martin Place with the PhDs and the supercomputers. That's nice. Wow, really good sales traction. That's incredible. A really clear business plan, long-term thinkers, one that's been investing heavily in the business for a number of years in terms of systems, processes, very clear strategy, and executing to that. Well, you absolutely could see the fruits of their labor coming to bear. The margins were actually, I think they might have been slightly negative at that point in time. But, the cost base was very stable, very scalable, and they were just growing and growing and growing. And it was like, wait a second, with some very basic, almost timid assumptions, the forward PE of this thing is like 6, right? And it's about to be, and they're now paying a dividend, and management were just consistent the whole way through, right? And it just wasn't on the radar to anyone else, and almost couldn't be on the radar for all those things I spoke about. It didn't meet certain profitability criteria or liquidity criteria, and it just completely overlooked, underloved. But those things that I'm talking about were just evident. I say it now, it's like, oh, look how smart I am. Look how easy that was. Like, the reality is when you do this is you do all of that work and you go, I love, this is brilliant. This is, these are rare, right? These opportunities are rare. So when you do find them and you do build conviction, like don't nickel and dime it, like go in pretty hard. And you buy it, you take a position, and it's sort of like, okay, another quarter goes by, a little bit of progress, nothing changes. Another quarter goes by, some good progress, nothing changes. And it does this, like most stocks do, in fact. It's sort of like nothing, and then everything. And, it's just like, it's these quantum leaps you sort of get. We like to imagine this steady linear progress that share price is matching the underlying intrinsic value accretion of the company. And it's not. It's it's like war. It's long periods of boredom, interspersed with short periods of sheer terror or joy. and it's hard, right? Because you're sitting there going, I've got something wrong. Why doesn't anyone else see it? And again, years can go by while you're watching it. And then finally it happens, and all of that emotional stress is thank God I was right. And then the instinct is, I've got to take the profit, because if I don't take it, it's going to go. And you got to go, no. I'm up threefold, but it's still cheap. The thesis is still in play. In fact, it looks as though the business is doing even better than I thought. Maybe I should buy some more. I'm going to average up as opposed to average down. And I think that's the normal journey you go through with, it's a long answer, I know, but with these kinds of things is to just, to summarize, deep research, a clear idea of an investment thesis. How is this going to play out? Actual clear markers along the way that demonstrate that, and a price that absolutely does not reflect the reality of the situation that you can take advantage of. And then again, there is a word here that's just escaping me, but that relentless slothiness to just like allow it time. You cannot force the petals of a flower to open, right? You must give it time, and it will do its thing in due season, and you just have to let it do that thing. And if you can do all of that, and you can do, and by the way, you only need to be right 6 times out of 10, as Peter Lynch famously said, to do extraordinarily well, right? Because when things don't go so well, and they won't go that well, or, almost half of the time, okay, I lost 20, 30%, maybe 50% if I really got it wrong. But you get these kinds of things right, and they're like a 10 bagger over 5 years. It's like the maths is insane. Give me 2 or 3 of those over my investment career, and I am done and dusted.
Well, you've completely set yourself up for a stock tip here, Andrew. But we should caveat that you've had a stellar run coming on the show and giving us some great investment opportunities, I should say. Catapult in 2020 on the show, which has done incredibly well.
What a journey, though, right? Like,
yeah.
Can I just say again, I'm happy to celebrate that one, but God, I looked like an idiot for a long time there.
We spoke about stealth holdings at FinFest. You did Drop Suite last year on the summer series. So with that in mind, what are you looking at right now, or what's coming through the community? Where are the opportunities that are exciting you?
I still really like XRF Scientific. I think they're a really nice little company. I think they're well positioned. I think they're well run. I still think Stealth and Catapult, they're my two biggest equity positions still. I still really like them. They've got a long way to run. Laser Bond is a bit out of favour. So, thanks for the kind words. There were some good picks in there, but I think I also pitched EnviroSuite to you guys. That hasn't performed well. I'm pretty much out of that at the moment. Laser Bond, I think I may have talked about before as well, which hasn't done well. What you have to do in those situations, that's two good examples, in fact. EnviroSuite was a company, I won't go into the thesis again, but it just looks at this stage, the thesis isn't playing out, so I'm out. Laser Bond, to me, strikes me as something that hasn't happened, but not for any reasons of incompetence or, it was more a consequence of a bit of bad luck, a bit of poor timing, rather than any massive mistakes or blunders from management or any major structural changes within the industry. So I actually think that that's actually got some pretty good value sort of going for it. But the biggest position is Bitcoin. So I know we're going to talk about that, but I mean, that's It does me no favors, by the way, because the business was not set up to handle that. It does me zero favors, but I'm here to make money, right?
Let's pause there. Let's take a quick break and use that as the tease. On the other side of the break, we're going to unpack Andrew's road to Damascus conversion to Bitcoin and his view on the cryptocurrency now. Welcome back to Equity Mates. We're talking with Andrew Page. He's the founder of strawman.com, a Australian investing community focused on Aussie small caps. But we must say that Andrew's focus is split these days because Bitcoin takes up a lot of his brain space, it seems. And we've got to say, Andrew, we've known you for years now on the journey of Equity Mates and of you building Strawman. And you weren't always a Bitcoin bull. So tell us about the conversion journey for people who haven't followed you. What was the turning point for you, and what's your view on it today?
It's a mind virus, this bloody thing. It's so annoying. It's annoying and it's embarrassing, if I'm being honest with you, because we are still at the phase where people look at you like you've got two heads, right? And so, again, it's not doing the career or business any favors, but the short version is, like all of us, like this thing sort of hits the headlines really about 2010, 2012. Oh, that's interesting. Not paying any attention. The price starts going up. This is a bubble, right? This is obviously a bubble. And then it crashes and all of your biases are confirmed. And then 2017, it ran up again. It's like, humans are so dumb. It's another bubble and it crashes and you confirm it. And then in 2020, like around the COVID era, it sort of, the next sort of leg went up. And it was at that point, it was like, I'm pretty sure it's a scam, but I need to, for my own sake, I need to dig into it a little bit more so I can give an intelligent reason as to why it's a scam for myself and for others, because it just kept on coming. The stupid thing wouldn't go away, right? So it was like, okay, let's dig into this so I can really put a nail in the coffin. Here's the death blow. Here's the thing that no one understands. Like, I will explain it to you. And the classic meme in Bitcoin is, I'm new to Bitcoin. Let me tell you what's wrong with it. And so everyone makes that mistake. Going through that process, I orange pilled myself, basically. It was sort of like, okay, obviously quantum computing is going to wreck this. Okay. Obviously the government's going to ban it. All right. Obviously a better version is going to come along. And every time, I know we're talking about Bitcoin, but it's the same with equities, right? You try and find a bull case by trying to articulate the bear case. It's Charlie Munger's whole thing. You should be able to articulate the bear case better than anyone else. So here's what's wrong with ResMed. Here's what's wrong with Cochlear. And try and steel man the bear case. Because if you can't destroy an investment idea, it must be a good idea, right? And that's what happened with Bitcoin. It was just like, the more I looked into it with a deliberate, intentional view to find the Achilles heel, I couldn't. And then it's like, well, if I'm intellectually honest with myself and I can't kill it. Therefore, I must invest in it. And then you start with a little allocation, and that becomes a bigger allocation. And then you read more and you learn more, and you just go further and further and further down the rabbit hole. And it becomes something that is, I worked 30 years in finance without ever understanding money. And Bitcoin is a great, so regardless of whether you like it or not, but I just like, it's worth the study just to teach you about money, right? Like it's the stock and trade of what we work in. And yet none of us really grasp it, I think. And when that grok moment, it's sort of like, it really is fix the money, fix the world. And you start becoming this stupid laser-eyed maximalist that just sounds like a crazy person.
So Andrew, what specifically is it about Bitcoin then that you found during that process of trying to, I guess, find all the contradictions and prove that it wasn't going to be a good investment? What is the elevator pitch for Bitcoin?
Yeah. That is impossible to do, sadly, because I think everyone's tried to give the short answer. It's like going back to the time before the printing press and trying to articulate the significance of that invention. You know, so I can write faster. Yeah, you can write faster and you can spread this knowledge to the world really cheaply and really effectively. Yeah, but I could just write it though, right? Or electricity. It seems really dangerous and dirty. And a lot of people are dying and it costs a fortune to hook up my house. And there's a thing called a candle, which works really, really well. Or here's a horse, which has worked brilliantly for 10,000 years. And you've got this noisy, super expensive automobile. Like it's such a paradigm shift that it's hard to go, all you need to know about Bitcoin is bup, bup, bup. And then everyone goes, it's not that. You've got to be careful with your language here. And I've very much tried to stop talking about it as an investment. You don't buy Bitcoin to make money. You make money to buy Bitcoin. Bitcoin is money. People go, it doesn't have any cash flow. It doesn't have any. It's like, no, because it's money. It's not an investment, right? It's not something I'm going to buy and then sell. I'm not going to give my Australian dollars to this thing to hope that it goes up because of some greater fool theory that turn back into dollars. And that's what I'm doing here. So I'm never selling. I'm never ever selling in a million years. I will spend it on things that I deem of value to my life. Money should store your wealth, and it should enable you to acquire the things that you want to acquire. Put it this way. If I was in Argentina and everyone in Argentina pretty much uses the US dollar, because, I mean, do I even need to explain why, right? Like, you guys get that. It's a crappy currency and it just hyperinflates all the time, gets confiscated, there's capital control. You know, I'm using the US dollar. Thank you very much. Does anyone in Argentina earn money in the local currency, buy greenbacks, wait for it to go up and then go back into the local currency? You don't do that. It's a one-way street. This is the money that I choose to use. And it's a bit of a paradigm shift, but that's the way to think about it. I'm just using a different kind of money. And how is it different? No one controls it. It's non-sovereign. No one can stop me from using it or censor it. Anyone, whether I'm a billionaire or I'm a peasant in Nigeria, I've got the same access to it. You know, look what the smartphone did in terms of democratizing access to information in the World Wide Web. This does it for money, right? And it sort of had all of that potential, but it's just reached escape velocity now, where it's sort of like regulations are all cleared up. Wall Street's on board. Dudes, we just had Larry Fink of BlackRock at Davos pitching Bitcoin. Like, I'm grabbing my friends by the collars, like, wake the F up. Like, at what point do you stop sniggering about this? This is Larry Fink. The Bitcoin ETF has been the most successful launch in history by an order of magnitude. It's already overtaken the gold ETF, right? It's sort of like, it is here and it is here to stay. You know, it's first they ignore you, then they laugh at you, then they fight you, and then you win. And we've got to just come out of the then they fight you sort of phase. And it's a $2 trillion asset. It's getting to the stage now where it's sort of like it has the liquidity to be a reasonable consideration for sovereign wealth funds. And that's what Larry was saying at Davos. I just had a conversation with the sovereign wealth fund. The discussion there isn't should we buy Bitcoin? The discussion is should it be a 2% allocation or a 5% allocation? Wow. This isn't some weirdo on the internet in his mum's basement.
Now, Andrew, some people might be thinking you've gone too deep down the rabbit hole. So I'm going to give you an opportunity to bring them back into your fold, because you're not fully crypto pilled. You have some pretty strong views around some of the other cryptocurrencies that people might be buying. So give us your view on Ethereum, Solana, Trump, Melania, all the rest. Filecoin.
Scam.
Why is it just Bitcoin?
One of the real epiphanies that you have to sort of go through is to realize that it's a one-time invention. It's like we have wheel 1.0. There's no wheel 2.0. We have fire 1.0, right? We have electricity 1.0. We have, the internet protocol, TCP IP that we are. Once protocols get locked in and the network effects take over, nothing can take it over. I mean, there is an internet. Imagine if someone launched a company and they listed on the NASDAQ and their whole thing was, we're building the next internet. It's completely bounded on different protocols and that. But if everyone switches, it's a little bit faster and it's got some more capability. Who's in? Now, the internet is baked in the same way that AC is baked in for electricity. It's done. It's a one-time invention. It's the only one that has no pre-mine, no inside allocation, no CEO. People in the space call it a commodity, and it's a thought worth exploring. And a commodity is an asset without an issuer. XRP, Ethereum, Litecoin, all this other crap has massive insiders. They're VC backed. Ripple is never going to be the world reserve currency, right? This scam coin owned by a handful of people that have done nothing other than dump it on retail. That's the business model. I make a token, I convince people it's something, and then I sell it to you, and you're holding a bag of crap, right? And that's how I make money. And it's surprisingly effective. And Trump just showed us how effective that is. And then Melania did the same thing as well. And it's sort of like the fact that people have to go on the journey and here's the other thing. Don't buy it. I don't care. I am never going to have enough influence to pump this thing to the moon for my own vested self-interest. And I'm not going to, whether you guys or anyone listening buys it or doesn't buy it, it doesn't influence me. But do yourself a favor and research that and ask yourself the question as to why is this a legitimately one-time invention? And again, here we are at a point. It's the most powerful computer network in the world. It's the most distributed. It's the most accepted. It's just sort of, it's the only one that can truly claim to be neutral, open, permissionless, and a commodity. It's one. It's interesting. In 2017, we had Bitcoin and then we had all these altcoins, otherwise known as shitcoins, for very good reason, which made sense at the time because we had MySpace and then we had Facebook, we had this and then we had that. We always had better versions of technology. And Ethereum came out. We're the world computer. We're Turing complete smart contracts. We're going to do this and this. And it's like, very interesting, very, very compelling. And yet fast forward 8 years, can you guys name a single commercially viable project on Ethereum? I mean, I'll wait if you want to Google it.
No. But we're probably not the right.
No.
We're probably not the right people to ask.
There are some niche application. The main application is using the chain to launch other shitcoins. That's the main application, right? And so
and NFTs.
Yeah, look, I'm sure there's some .eth person out there listening right now going, well, actually, there's this thing that you're going to like. They're all very hyper niche. There has been no mass adoption in any way, shape, or form, and so. This time around, it's interesting that when people are shitcoining, apologies for the language, but you got to call a spade a spade. This time around, it's like we're not even pretending anymore. Trump comes out and goes, "It's a meme coin, like it's a joke." I'm not even pretending. I'm not going to. It's faster block times and more transactions per second and blah blah blah. No. It's a meme. It's a joke. And so I think that's a natural evolution. And then the next cycle will just be like, no, we're not even trying anymore, right? Because it is so laughable. By the way, there are websites you can go to. You can launch an Equity Mates token now.
No.
I think we're good. I think we're good.
Yeah, we thought about it way back in the day. But
It's funny, actually. There's a Bitcoin who launched to prove how stupid it kind of was, and it kind of took off a little bit. He made a bit of sort of money on it. So it's just like the world, we're definitely living in a simulation here. But the trouble is that, and again, I'd encourage people to do their own research. Don't listen to me. But when you look at any single one of these tokens, and there's literally 20,000 of them plus that are out there, they're all trending to zero against Bitcoin. Even the main ones, right? It's a winner take all market. Money tends to be a winner take all market, and it's one. So you can waste your time, or you can just, everyone shitcoins before they Bitcoin. I did. I own some Ethereum. But then once you realize, it's just like, oh, why am I holding this shit for? No, I'm going for the real deal, the pristine collateral. And there is only one.
Nice. Well, Andrew, I think that's a good place to wrap today's discussion. As always, you've left us with a lot to think about. Some pretty lofty price targets out there for Bitcoin in 2025. So we'll be watching to see how it all plays out. But on the stock side, thanks as always for giving us a few opportunities to think about as well. So we really appreciate your time as always.
I love it, guys. Look, honestly, I could go on. So so it's good that we ended here.
Yeah. No, thank you, Andrew. I'm sure we'll speak again. But until then, we really appreciate it.
Love it. Thanks, guys.
You have been listening to an Equity Mates Media production. In the spirit of reconciliation, Equity Mates Media acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. This podcast is intended for education and entertainment purposes. Any advice is general advice only and has not taken into account your personal financial circumstances, needs, or objectives. Before acting on general advice, you should consider if it is relevant to your needs and read the relevant product disclosure statement. And if you're unsure, please speak to a financial professional. The hosts of this podcast and their guests may have positions in the companies mentioned. Equity Mates Media operates under an Australian Financial Services Licence 540697.